So Azhar, can I just give you maybe one or two scenarios and get your advice as to what you would advise these potential testators to do next? We read a lot in the press and in the news that a lot of SMEs are going to be facing a lot of headwinds because of the economy and also because of the MCO. And because people can't go to work and the factories can't start up, so there's also cash flow issues that they may be facing. Assuming that the person is a sole breadwinner who is a testator, but doesn't pass on, just say he or she falls really, really ill because of stress and whatnot, the will, can it be effected while the person could be not passed on but incapacitated? Can the will be activated?
The will, as I mentioned earlier, only operates upon death. You can only use it upon death. If you have done some sort of additional planning, that additional planning, for example, can be by doing a trust. The client, this particular person may have a will and a trust. So when you do a trust, the one of the advantages of a trust is that the asset placed in that trust, right, that is in the name of the trustee, would not be subject to death only. You can begin distribution upon this business owner's disability, mental incapacity, even disappearance. For those assets, they are listed in the trust for it to be distributed to him or to his family members. So that one is something that you don't have to wait for probate. Where often it could be, what asset could you put in? You could put in, of course, cash. But if cash is tight, you put in things that you have, maybe unit trusts. You could put in your business shares, your private limited company shares that you have intention to quickly pass it on to your family member or your spouse or your children to continue to manage that business while you are sidelined due to that disability. Or you could put in life insurance policy in there as well, which can be of help, because if you are disabled, suffering one of those conditions that allow the insurance to be claimed, that insurance money could be used for the family and could be used for the cash flow for the business as well, right? So it plays an important role by having a trust to do quite a lot of things for businesses and for families.
I think this one here is actually probably a little bit more complex and definitely will require a professional rather than a downloaded will from the internet that you can just print off and follow the advice that you've just heard from our conversation, because a lot more planning and text and structures need to be involved.
Yes, when you do trust, it's a lot more complex than wills because there are a variety of scenarios to be covered. For example, upon disability, what happens? Do you want all your assets, their name in the trust, to be distributed to the beneficiaries, or do you want to reserve part of it for yourself, part of it for the family members to use, right, and part of it for the business? And if you disappear, for example, for whatever reason, the thing is, because under the Malaysian law, under the Evidence Act, when a person disappears continuously for 7 years, and you qualify with the provision set under the Evidence Act, the person could be deemed to be dead by way of disappearance, subject to a court order being obtained for that disappearance being equating to a presumed death, which now you can use your will and whatnot. But that will be a very long waiting time for 7 years. So some trusts where the assets you have placed into the trust, a condition for distribution could be contractually stated as, if you were to disappear for, let's say, 30 days or 90 days continuously, backed up with police reports from the family members, at the end of that period, with the family confirming again that this person have not come back, it may trigger a distribution of some of the assets in the trust to those beneficiaries for them to be able to use it for their day-to-day living.
So just say a testator does everything by the book without a trust and then passes on. How soon can his assets be distributed to the beneficiaries if it's not contested? Yeah.
If it's not contested, typically for you to get probate here these days with a lot of digitization in the courts, it will take you typically between, I guess, 3 to 5 months upon submission to the courts for you to get probate, that court order itself. But when do you apply for this court order very much depends on when the executor actually start moving upon death, because there's always a case that we find the testator have died many months ago. The executor in the will doesn't know what to do. He looks at the will, doesn't know what to do. He may or may not appoint a lawyer to assist. If he delay things, there will be, well, you add a few more months prior to probate. Then when he gets ready to apply for probate, that takes about 3 to 5 months for you to get probate. Once that's done, the role of the executor will now be to recover all those assets mentioned in the probate. Because for you to apply for probate, it's very important for the executor to list down all the assets of the deceased. The bank account, which bank account, what's the number, which branch, which bank, together with the properties, other investments. You need to be in detail because probate, the court order is granted only for those assets mentioned in that list submitted for probate. If you have a property that is not mentioned in that list, you will not be able to do distribution of the asset in the future. You will have to reapply to court to add on to it. So it's very messy. So an executor who is not familiar with the scope of work, there could be a lot of mistakes being done. That presents a delay to complete the distribution to the beneficiary. That also would mean there will be additional cost that the estate have to bear, meaning that there will be lesser inheritance to the family. Now, once you have got your probate done, which is 3 to 5 months I mentioned, collection of your assets from the various financial institutions will also take time. You can't just walk into a bank and just take the money, because they may have to do their own processes to verify whether the documents submitted to them are correct, because now it's no longer the account holder withdrawing, but it's somebody else. Then you would have to do recovery of properties that are name of the deceased into that particular executor's name. Thereafter, once you settle this, you have to find out what are the liabilities of the deceased. Credit card, housing loan, hire purchase, personal loan. You will have to write to the Inland Revenue to get tax clearance. This is a requirement under the Income Tax Act. The executor failed to comply with the Income Tax Act, for example, to pay the deceased personal taxes prior to his death, and also to pay for the estate taxes. They may have revenue there, such as rental income, that the estate have to pay tax for. If the executor don't do this, then the executor will run foul of the Income Tax Act. He will now become personally liable for those unpaid taxes, right? And if he distributed those assets without approval from the Inland Revenue or clearance from Inland Revenue, I think the Inland Revenue may exercise its powers to do recovery from the beneficiary, potentially based on what the Income Tax Act states. So let's say everything is straightforward. You're lucky enough there are no very few liabilities, no unpaid taxes whatsoever. You would still take about 18 months to about 30 over months to get it done. Very rare you can do a quick distribution, even though there's a will, because there's a process to go through that is sometimes beyond your control. Where you have to liaise with various parties like banks and whatnot, and land officers. When you want to do transfer of properties, you have to get lawyers and whatnot, right? There have been incidents that I've experienced where the title deed to properties are lost. The testator may have paid off the loan, redeemed the title in his name and whatnot, and all that. It's kept either in the house or somewhere else. But upon death, no one could find where's the deed. So when that happens, you would have to, you can't do distribution yet. You will have to get an extract, which means a police report, and then submit to the land office for an extract. So that creates delay. So if there's more than one title being lost, well, there's further delay. Another problem is sometimes the developer of the property, where you bought the property from, and it's all under master title, that developer have wound up quite some time ago, and there was no title issued whatsoever. The authorities have not issued any title. So upon death, that property, the ownership of that property, would still continue to linger on until that what we call the subdivision is done for that title, which could take many years. Right? So that's one of the problems. We have encountered that in a few of the cases that we have handled. Wow. Other than that, if it's very straightforward, you're probably 18 months, I guess you can say, pretty lucky.
Well, it just goes to show that even if you have the best processes followed right through to the T, and very straightforward processes like that, your beneficiaries may not have the 18 months of resources to sustain. So the will, even though it's good for the distribution of the assets, but in the meantime, that may be a big challenge if the testator is a sole breadwinner.
That's where you could supplement, in a way, the will with a trust, so to allow your family members to live on. During the MCO, everyone is saying that people may not have funds to last or even 2 months or 3 months. So here we're talking about 18 months, especially when you have minor children receiving your assets. I don't know who's going to pay for their expenses for the next 18 months. But with a trust, if you have done a trust, that trust would be the one paying for their expenses. So it's important when you do a trust to sit down with the estate planner to look at how much money does your children need on a month-to-month basis, so that they don't end up suffering financially and they can live quite comfortably during this period.
I think a lot of people, because of the increased and enhanced idea of security, they may either have a safety deposit box that they have in the banks or a safety deposit box that they have in the house. If one were to take the will, would you recommend that they store the wills in these kind of safety boxes, either at the bank or at the house, where maybe only they know the combination?
Right. If you were to put your will in a safe deposit box with the bank, the danger is that how do your executor get access to that safe deposit box? You won't be able to get access to it. Can he get a court order for it? He will not be able to get a court order for it for discovery of the will, because what you're doing is you're merely doing a fishing expedition, trying to find where the will is. You won't have grounds. So it's in a way, in the case of it's very near, but so near but so far away kind of thing. I would recommend clients, instead of keeping your own will in your own safe deposit box, because if you keep it in your own safe deposit box, only you know the combination. You have to get a locksmith or somehow extract it open. And once it's extracted open, your home safe deposit box, where is there a possibility of who extracts it? It could be one of the beneficiaries. If you have a beneficiary who have got the least in the will, right, who extracted it, and then he looks at it like, okay, I'm only getting 10,000, whereas somebody else is getting more. But I know the previous will I had a lot more portion, so he could just destroy that later will or make it invalid, so that the previous latest will, the second last will, would be the valid one. So there can be a lot of situations where tampering is done. We would recommend for all clients, for all testators, when they do their will, it's best to keep your will in a safe location, but not too safe where nobody can get access to it. It should be a place where you can access it when you need to, and when you're no longer around, your executor is able to access it. For example, like in Rockwills, we have our custody services, where the client could keep the will with us during his lifetime. He could view it, he could take it out if he wants, and keep it himself. Or if it's still kept with us, what will happen is that the executor with a death certificate of the testator is now allowed to do the retrieval of that will, so that you know that your will is always going to be there. It's not going to get lost. No one is able to tamper with your will. And the one who takes out the will from Rockwills would be someone that is authorized to do so, which is the executor. So you have that's the best way I find for you to keep this particular will. Putting in a safe deposit box is not a good idea.
Thank you so much for your sharing, Mr. Azhar. I learned a lot with regard to how to prepare for the inevitable that will come. It's just we don't know when. And how to prepare our loved ones as well to continue the lifestyle that we hope to give them after our departure. Mr. Azhar, just one final thought before I let you go. How many percent of Malaysians have wills?
At the moment, in terms for Rockwills, because we deal with the non-Muslim market, we have written ourselves about 200,000 wills for non-Muslims. I would reckon in terms of eligible non-Muslims that are 18 years and above to write a will, there are probably about, I guess, in the region about 5 to 6 million who are eligible to write their will. They are probably in terms of percentage, I would say, still in the region about close to 90% that have yet to get their will done. So it's a lot of people yet to get their will done. And when you get your will done, it's not a one-off deal or one-off transaction that you do, because you write it today. There could be changes in the family or changes in your wealth that require you to adjust your distribution in the will. I just had a call from a client yesterday who wanted to find out. I didn't think about giving this particular asset early on when I did the will with you earlier, but now I'm having second thoughts. I'm thinking about giving it to someone else. That client had a change of heart. Instead of giving it to the nephew, that client wanted to give it to the niece instead. So when you do a will today, it doesn't mean that it should stay like that until death, because a lot of things could change in the family. It is good to have a review of it every 2 to 3 years once, so that you could see, okay, I'm still happy with the contents or not.
Well, thank you so much, Mr. Azhar. Thank you so much for spending your time with us and for sharing with all Malaysians the importance of wills and the importance of having one. And because we don't know the time, the earlier the better, I take it. Thanks again,
Yes,
Mr. Azhar.
earlier is better.
Yes.
Thank you, Anas.
Bye-bye.